Oh brother, this is where people start to panic. Ooh, you're watching the Stock Market Brief Show. This is where we navigate the financial markets through the lens of technical and intermarket analysis. In today's video, it's very, very important. Why? Because we have big data coming out on Friday, so I want to give you those important expected moves and talk about where there's opportunities, potentially, in the markets and so much more. If you haven't done so already, make sure to check out the swing trading community. I do it through Patreon, but I don't post on Patreon. I post everything on Discord. So you sign up at Patreon. It's only $9 a month, or you can sign up for a year. It's a lot cheaper. And then you go ahead and sync your Discord up. And once you sync your Discord up to Patreon, then you go ahead and be able to get into my Discord. And then all of a sudden you'll have access to all these great benefits. So make sure to do that. And also check out Interactive Brokers with a link down below, and make sure to check out their campus. They offer a bunch of free resources and tools, including a podcast, webinars, classes, courses, and they have an excellent blog there too as well. Let's go ahead and get into today's show. Welcome back, people. I'm just sitting here chilling, sipping on a little beer right now. Why's it got to sound like that? Today, the markets, well, we traded lower, but the 11 sectors, if you take over a look over here, I mean, it was really XLC and technology that really drew the markets downwards. Everything else, we saw some nice rotations into. If we take a look as to why, what brought the markets down, well, CRM reported, and this is obviously a big player in the markets. It was down a whopping 20% after reporting its earnings. There was also soft GDP numbers that came out. Did the markets really respond to that? I mean, I would say that the 10-year yield came off a little bit because of that, but we also, if we were paying close attention, was, on Twitter, we posted a stock market brief. I couldn't make a video about it, but the 10-year yield was getting very, very extended here. So to see it come off a little bit, to me, makes sense. Also, the dollar came off a little bit there too as well today. And usually when you see a falling dollar, it could potentially help out the S&P 500, but we still saw that weakness today. And when you looked at all the sectors that we posted, this was a chart from yesterday. I'm going to be posting my updated one on my Discord today, but XLI was getting very, very extended to the downside, and that was the opportunity that I kind of keyed in on, and it was up about 0.67%. Didn't hold a candle to utilities and real estate, which are obviously rate-sensitive names, and those saw a big, big move. So good stuff over there. You can see right here, this is where I was on that article where I was considering XLI, but then also looking at the Sailor to Shift tool, Bitcoin was an opportunity as well, and we saw that go higher. So XLI, some Bitcoin did not too bad today, and I'm still interested in those, but we'll talk a little bit more about those later. If you actually look at the heat map today, you look at Microsoft got clobbered 3.38%, NVIDIA down 3.77%, and really the S&P 500 was holding up rather well. It wasn't until we had some data come out two times, right? We had the reportedly U.S.'s curbing license for advanced chip exports to the Middle East by NVIDIA and AMD, and we saw really a sudden hit to those names. And NVIDIA obviously is one of the largest market cap names. It's probably the most important name in the S&P 500, given the context of implied volatility and how high it is. It can really move the market. And then shortly thereafter, we had some macro data from Europe, right? It said reportedly President Biden secretly gave Ukraine permission to use U.S. weapons for attack inside of Russia. And after that came out, it was kind of like a back-to-back news, headline. And we really saw some volatility come back in to the markets. But I want to touch on that because even though the S&P 500 fell pretty hard into the close and then we bounced, if you take a look at something like smart money versus dumb money, smart money being like high yield bonds, right? The bond market, and then dumb money being the SPY, right? Don't get offended, please. Oh my gosh. This one actually finished near the highs of the day, right? As we just kind of ripped higher. And S&P 500, well, we crashed down to the lows. And I just want to point out many times, now that was just a very small divergence, but as we've seen in the past, where high yield, the smart money puts in higher lows, and dumb money, the SPY, puts in lower lows. That's a positive divergence, and we've seen rallies from there, but it wasn't only there. You can take a look over here as well. It did the same thing, and then we rallied. It's high yield that gave us that insight. And if we take it a day prior to this, right, not only this day, but just a day, trading day ago, high yield actually was finished at the low of the day, while SPY finished at the very end of the day. It had this massive squeeze. And guess what happened? Well, the S&P 500 ended up falling back down on its face. So is it going to be as important as that day? I don't know. I still think it's pretty cool to take a look at. Now, going into tomorrow, we have data coming out an hour before the market opens up. And this is obviously what the market's been waiting for. When we come into this type of data, implied volatility swells up like a pufferfish. So we're going to get wider expected moves. So today, I'm going to go ahead and share with you the daily expected moves, which I share with my Discord group every day. I even made a video on how you can pull these numbers too as well. So I'm not just trying to get you into the Discord, but I do offer a lot of stuff in there for, a significant amount of money, $9 a month. But here are the assets right here that have the daily expected moves. The daily expected moves are plus or minus, so I give you the upper and lower levels, and then I go ahead and add the 2 sigma levels too, because sometimes you break these upper and lower levels, right? 68% of the time, you close within the upper and lower level, so this is all about probabilities here. And then over here, though, 2 sigma upper and lower levels, you're looking at 95% of the times will close within it, which means that if you get below the lower level or above the upper level, things are probably pretty extended. Now, if you take a look at today, where did we close at? Well, we actually bounced from the daily expected move, right? And we came back up and we closed underneath the daily expected move. So I want to update and just show you what this looks like. And I want to call out a couple levels. So first and foremost, the daily expected move for the S&P 500 is 519.32. That's to the downside. To the upside is 525.90. Notice we're below a weekly anchored VWAP, and it is declining. That is bearish. Once we're also, and we only have one trading day left to this week and this month. And then also we're below a declining 5-day moving average, albeit we're getting extended. So to see bounces, it's always a possibility. So be aware of that. But if we do get continued sell side, the upper monthly expected move, we've been trading outside of it. And this is something that we called out a while ago, that there's always a higher probability that we come within that. But now we're in kind of a weird situation because the weekly expected move, we're currently trading outside of it. Okay, so if we do come back off this data, if the market likes what it sees, we can easily come right back within into and around this range. That is the happy place. But we started breaking from it, seeing some strong volume. So if we get more sell side, the levels that I'd be watching is obviously the lower daily expected move, the upper monthly expected move, and then right down here is actually the month-to-date anchored VWAP. So right here, this zone, if price actually comes down here, I would look to see if there's strength after that for a potential bounce for an intraday type trade. And it's important to note that I'm talking intraday. You could hold longer if you'd like, but just understand that you'll be fighting a shorter term trend that is currently declining. So if you are the patient type and you want to play stuff like this, well, obviously you have to wait for the 5-day moving average to flatten out and then start turning back up. Okay, let's continue on and we'll look at the daily time frame. You can see this bearish engulfing candle. We did get confirmation of a breakdown below that. So that is bearish, but we are still holding, like I said, the upper monthly expected move, and we're right at that monthly VWAP. And if I anchor a VWAP onto this swing high or this big bearish engulfing candle, you'll see that's declining too as well. So if we come back down and come back around and pinch between these two areas, that's always a possibility, and then look for a potential break to the upside, which could be bullish, or a breakdown, which can very well be bearish. But another level to watch out for is that 5,200. So this is what I wrote on the Twitter article blog yesterday. If you didn't get to see that, you can go back and look at it. I did this stock market brief, but in text form. But 5,200 is a key level from a gamma perspective. So if price wants to wiggle itself down there to 5,200, that kind of, in a way would be in line with the 520 on the SPY there too as well. So that would be the level that I'd be looking for a potential move for an intraday trade. But remember, I want to look to see if there's strength. Now, also, so we're not only below a declining 5-day moving average, but we're also below the flip line. The flip line is critical because this is how dealers, when you're below or above it, it tells you what dealers and how volatility is going to play out. When you're below it, you get selling into selling into selling, but yet buying into buying into buying. This is where liquidity dries up and volatility increases. So you get much more volatile price swings. Now, when it's above it, right, we talk about this often, that's where you look to sell the rips, buy the dips, and volatility suppresses, right? It goes down, liquidity increases. If we take a look at the weekly time frame, we are closed, or on the day we closed right at the weekly 5 EMA, and this is rather neutral, but we're still holding above it, which is bullish. And I know that very soon here, right, if the week closes like this, people are going to start calling out a 3-bar reversal pattern here, the evening star pattern, which if closed below there, right, then you can get confirmation as a potential reversal. You'll notice that this candle over here was a big doji, which means that there's an indecisive move taking place. So this pattern can very well be bearish, but just understand that it's on an uptrend. We're pulling back. We're still above that weekly 5 EMA. So can it get bad? It can obviously get bad. Where is that level? 5,200 is right down into this range. So pay attention to that because we can always come back and make some snapbacks as well. So you got to be really prepared for kind of an either or type of situation. Now, the reason why I bring up the potential reversal here is because if you take a look at the NASDAQ summation index, you can see that there's a potential change in trend here for the last 2 days. The parabolic SAR ticked above that, and that has indicated potential changes in trends many times, including right here. We had the potential change in trend that led us to the upside. You can see the potential change in trend. The last bearish one went sideways and then down there too as well. Okay, so this does help us identify potential changes in trend. You can also take a look here at the summation index for the NYSE, and the NYSE, which is the New York Stock Exchange, another broad market. It's been now 3 days of potentially identifying a potential shift in the trend. Last time we had a bullish shift over here, the market went higher, and now we're getting a bearish shift about 3 days ago, and we saw the market go a little bit lower. The prior bearish one to that was right over here. So if I go right up, you can see the market actually did go down there too as well. And as the market's going down, you can even look at the NYSE McClellan oscillator. And this was putting in lower highs. Meanwhile, we were putting in higher highs. So what that was telling me was that the market was getting stronger, but yet the internals were weakening. And if you look back through history, this has played out many different times, both from a positive and negative type of divergence. I want to hop over to the Sailor to Shift tool and just kind of walk through this because Bitcoin is looking pretty nice here. But I don't want to get overly confident, because who knows what can very well happen. But we did get the buy signal the prior week or the week before that. It was right at about 67,700, and we shot from that level, and now we have an inside trading week, and we're still above the rate of change, the zero line, which is the 4-week rate of change between Bitcoin and gold. So we're still on the buy signal and the buy trigger as it stands. So I'm looking for Bitcoin to potentially make a move higher, but I'm just also managing risk as I see fit. Now, one thing that I want to call is a 67,000, just slightly above it. You can see it's acted as prior resistance, and we've been trading around this area, pretty significantly. It's kind of just been tagging it multiple times. You can see over and over again, and now we're holding it here. So when we broke this, and we saw this big volume bar over here, I went ahead and anchored some volume weighted average to that. And the price action you can see has been holding above that. And then I'm anchored a VWAP to here, and you can see price action has been getting below that. So we're really kind of pinching between these anchored VWAPs and holding above that 67,000. So my thought here is if we can still hold these levels over here and potentially make a move outside of it, it could be quite bullish. We're in continuation to try to take out this prior high over here, this kind of zone there. But overall, we are seeing constructive moves, right? We see a strong move, it digests, a strong move, it digests, strong move, and it's digesting here. So I think that there's opportunity here in Bitcoin, but there's also, by opportunity, I mean opportunity to the upside, but also it's a very small minimal risk given the context of price action getting very tight. Another interesting thing was Dow Jones. I want to point out that the percent of stocks above the 20-day are getting pretty extended to the downside. Okay, and this makes sense because industrials got beat up, and then you had CRM, which I believe Salesforce is in the Dow Jones Industrials, but Dow Jones has been getting completely clobbered. And something that gave us insight was actually the transports. The transports, right, while Dow Jones was putting in a new high, the transports actually put in a lower high. Today, however, ended up, I think the transports were actually up on the day, and Dow Jones was down. But we are pulling down after some significant sell side from being at the 40,000, we're right back down to 38,000. We're coming into that lower Bollinger Band. So I think that there might be an opportunity for a bounce in the near future in the industrials. Now, I don't know necessarily if Dow Jones Industrials would be the way to play this, but I've been, like I said, going back to what I said prior, was looking at the industrials, specifically like the XLI or some various names within there. I will say this, that I noticed UPS is an industrial name, and that thing has been completely hammered. I don't have the chart with me, but today it actually had a reversal outside candle. So if you take a look at UPS, you can go see that for yourself. So potentially that's maybe telling us that, hey, we might get a little bit of a bounce, something in, some industrial names, maybe like UPS, maybe something like FedEx, right? I didn't see that chart, but I can imagine that we probably close at the highs of the day. And then you could have a stop loss at the low of those candles if you decide to try to trade those or trade that type of a bounce. Well, that's all I got for you on today's episode, everybody. We covered quite a bit. Hope it helps out, and I'll see you on the next episode.